Hi, welcome to another session of ACCA F5 Performance Management. Once again, I'm called John Ntende, and today's topic is going to be about how to make decisions, specifically further processing decisions. You can reach me on the following email address as indicated on your screen. So let's begin off by understanding some basic theory surrounding how to evaluate further processing decisions. So you can see on your diagram here, we have process 1. Okay, so we have raw materials this side, then we add certain costs and we end up with product A. Now the question we are trying to evaluate is, should we proceed to make product B, as you can see right here. So there is an option available to us. We can stop at product A, or we can proceed to make product B using process 2 and additional costs 2. Now the criteria to use is that we should only proceed if the incremental revenue from making B exceeds the additional costs. So mathematically it is simply, we should proceed if the price of product B, okay, less the price of product A, which is what they are calling the additional revenue or incremental revenue, exceeds the cost. And think about it, it's quite logical. If I'm to move, okay, from product A to product B, that means the process 2 shouldn't be expensive. So the incremental revenue should exceed the costs, and the incremental revenue is the price of B less the price of product A. As long as that exceeds the additional costs, then we should proceed. So the best way to illustrate this is to go through a standard exam question. Now this question is called Sniff Co. It came in December 2007. You can download a copy of that paper from the ACCA website as indicated on your screen, accaglobal.com. I have the question right here with me. I suggest you pause the video and spend about 15 minutes to read through this question, Sniff Co. Okay, let's assume that you've gone through the question and you understand what is involved. But before we proceed, I want to illustrate something called relevant costs. What is a relevant cost? A relevant cost is 3 things. It is something which is going to occur in the future as a result of a decision we've undertaken. It is something incremental. So things like fixed costs which wouldn't change as a result of a certain decision would be ideally not be a relevant cost. And it's a cash flow, meaning things like depreciation, amortization wouldn't qualify to be relevant costs. So we're going to evaluate many of the costs in the scenario using relevant costing principles. So a relevant cost is a future incremental cash flow. So let's look at the question. Once again, you should start with the requirement. So as you can see on your screen, there are 4 parts of the question. We're going to concentrate on part B right here. Okay, so we're trying to evaluate whether Sniff Co should experiment with the hormone adding process. So this hormone adding process would be this process 2. Okay, so this is the hormone adding process, process 2. So we need to figure out the costs, the additional costs for adding hormone, and we also need to figure out the price of the product B, after which we shall get the incremental revenue and compare it with the costs. Then we shall be able to make a decision. And they're telling us provide a separate assessment because there are two products. There's a male version and a female version of the product. So we're going to concentrate on part B. The rest is theory, which you can clearly get from the answer sheet. I have the answer sheet right here with me. Okay, so let's go through the question. So remember, what we're trying to do is to figure out the additional costs. So let's try and figure out the additional costs, as you can see right here. The first cost we need to figure out is the hormones. Okay, so if you go to the question right here, okay, if you look at this paragraph right here, they're telling us they're going to select an output of 1,000 liters. Okay, 200 liters, 20% will be for male customers, and 2 liters of hormone costing 750 per liter will then be added. So as you can see from my layout here, we have 2 liters, okay, of hormone. So the 2 is coming from here. It's very important to know where I'm getting these figures from. So 2 liters is coming from there. Okay, costing 750. Where am I getting 750? 750 is, so we're adding 2 liters of hormone to the male portion. So the total cost, okay, is simply, so the product of 2 by 750 is 15,500. I hope you can all see that. So as you can see from my formula here, what we're doing is multiplying 2 by 750 to give us 15,500. Similarly, the male version, rather the female version, okay, the remaining 800 liters will be for female customers. Okay, and 8 liters, I hope you can see that, 8 liters, and 8 liters of hormone will be added, costing 12,000. So 8 liters costing 12,000 will give us 96,000. Okay, hope this is very clear. Remember, we're trying to evaluate the additional costs. You can see these are the additional costs. So we have the normal perfume and we're adding additional costs. Okay, so the criteria is we need to figure out what the additional costs are and then compare them to the price of B less the price of A using relevant costing principles. So relevant costs are future incremental cash flows, and the hormone, clearly we can see that it's a future cash flow, it's incremental, and because of that it's a relevant cost, because we wouldn't incur the hormone costs if we were not going to make the decision of processing further. How about the supervisor costs? Okay, the supervisor costs. Okay, let's look. Can you figure out this paragraph? Okay, the new process will be supervised by one of the more experienced supervisors currently employed by Sniff Co. His current annual salary is 35,000. Okay, and it's expected that he will spend 10% of his working time on adding. So you see, even if we don't process further, okay, the supervisor costs and not incremental. You see? So either way, whether we pay him or not, whether we're going to process the product further or not, we will still pay him his salary. So the supervisor costs are 0. Okay, so as you can see, supervisor will be paid whether or not product is made. So the supervisor costs are 0. I hope that is clear. Supervisor costs are 0 because whether or not the product is made, we shall pay him his salary. And remember, we're using relevant costing principles. The cost should be a future cost, should be incremental, and it should be a cash flow. So the supervisor costs don't pass that test. How about the fixed costs? Fixed costs. Okay, the statement is right here. Sniff Co allocates fixed overhead at the rate of 25 per hour. Now remember, fixed costs do not pass our criteria of relevant costs because they are not incremental. Okay, they are not incremental. They do not change as a result of the decision. So that means they're not incremental, they're fixed. So fixed costs are 0 because they're not incremental. Now in the exam, it's very important to indicate, okay, whether cost is relevant or not. So you don't just ignore it. You have to indicate why you've not included it, and clearly this outline of solution indicates that. Okay, so same thing for female version. We shall have 0 here and then 0 there. About market research. Okay, can you see the statement right here? Okay, the market research has cost 3,000. That means if we go back to our criteria of relevant costs, the market research does not pass the future criteria. It has already occurred. That means it's a sunk cost. It's a historical cost. So the market research, its relevant cost is 0 because it's a historical cost. It has already been incurred. Whether we undertake the process or not, we've already incurred the cost. So either way, that figure is 0. So these are some free marks. Okay, next we need to get the relevant cost for labor. Okay, now where is the labor component? Okay, the statement is right here, this paragraph here. So if you're looking at your paper, look at that paragraph. Extra labor will be required to further process the perfume. So 500 hours for the male version and 700 hours for the female version. So the relevant cost for labor, the first question you need to ask is there spare capacity? Now in this case, they're telling us that we shall need extra 500 hours for male and 700 hours for the female. That means there's no extra capacity. That means the cost of the labor is not the normal rate, but will be the cost of the contribution foregone from diverting the labor. So that's what we're going to try and compute here. And let's see how we can compute this figure. Okay, so labor rate is equal to contribution foregone. But what is contribution? Contribution is sales less variable costs. Okay, so what are the sales? Okay, now sales, we have 1,000 liters. Where are we getting 1,000 liters from? Okay, the output selected for further processing is 1,000 liters. I hope you can all see where that paragraph is. So what we are selecting for further processing is 1,000 liters, meaning that if we divert the labor from the normal procedure, how much are we going to lose from diverting our labor? Remember, there is no spare capacity, so we have to divert the labor. So we need to figure out how much are we going to lose if we divert people who are working on 1,000 liters, okay, of the normal product. So the going rate, the current rate is 399.80. Where am I getting this figure from? Okay, look at the first paragraph. The current price, okay, is 39.98 for 100 milliliters. So there's a simple computation I would like to show you how I got 398. So now 1 liter is equal to 1,000 milliliters. Please note, 1 liter is equal to 1,000 milliliters. We've been told that 100 milliliters costs 39.98 right here. 39.98 per 100 milliliters. So we need to convert this cost to a cost per liter. Remember, a liter is 1,000 milliliters. So if 100 milliliters cost 39.98, that means that 1 mil, okay, will be 39.98 divided by 100, and that means that 1,000 milliliters will be this figure here multiplied by 1,000, and so this gives us the 399.8. okay, I hope that is clear. So the rate per liter is 399.8, and if we multiply, as you can see, we get 399,800. Remember, we're trying to find the labor rate, and the labor rate is equal to the contribution foregone when we divert our workers from producing the normal product to adding the hormone. So what are the costs if we are selling at this? What are the costs? What is the constitution of this 1,000 liters? Back to the question. Okay, back to the question. The output selected for further processing is 1,000 liters, about 1/10 of the company's normal output. Okay, of this, 99% is made up of diluted alcohol, which costs $20 per liter. So alcohol, diluted alcohol, okay, so diluted alcohol is 99%. As you can see, this is 99% of 1,000. So 99% of 1,000 is 990 liters, and the rate is 20. The rate is right here. The rate is 20, meaning that the total cost of diluted alcohol is 19,800. So if 99% is diluted alcohol, that means the other component, which is aromatic oil, which is right here. So the rest is a blend of aromatic oils costing 18,000. So the rest, which is 1%, okay, so that the sum of these two is 1,000. Okay, 18,000, the rate 18,000 per liter. That means the total costs of aromatic oils is 180,000. That means the total costs 180 plus 19.8 gives me 199,800. Okay, meaning that the contribution foregone, okay, the contribution foregone is the sales. Okay, remember, our contribution is sales minus the variable cost, which gives me 200,000. So 200,000 is 399,800 minus 199,800 to give me 200,000. Okay, but remember I'm interested in a rate per hour. Okay, now how many hours I used to make 1,000 liters? Back to the question. Okay, the labor required to produce 1,000 liters, okay, is 2,000 hours, meaning that the rate per hour, okay, the rate per hour is 200,000, okay, divided by 2,000 gives me 100. So the contribution foregone per hour is $100. Now remember, I'm not including, okay, the normal labor rate, because this labor rate is not relevant. Remember, a relevant cost is a future incremental. That labor rate will be paid whether or not I'm making the extra alcohol or not. So in my computation of the variable cost, okay, I've excluded the normal labor. Okay, exclude normal labor rate as it is not incremental. Okay, so that's the reason I've not included the normal labor rate. Okay, so in my computation of the variable cost, I exclude the normal rate as it is not incremental. Remember, I'm only looking at what they are calling relevant costs. Relevant costs are future incremental cash flows. So the relevant cost of labor, okay, when there is no spare capacity, is equivalent to the contribution foregone. I mean, the contribution you will lose if you divert your labor, and that is the normal product. Remember, it is 1,000 liters being sold at 3998 to give you 39. Then the total variable costs, you calculate the contribution foregone, then you convert this to a rate per hour. The total hours are 2,000 right here. So if you divide 200,000 by 2,000, you get 100. So that is the rate I'm carrying over to here. Okay, you see? So that is the rate I'm carrying over here. So the extra labor, okay, the extra labor is 500 hours for male version, okay, and 700 hours for female version. So you can see 500 here, 700 here, multiplied by the labor rate to give you 50,000, multiplied by the labor rate here to give you 50,000. So 700 by 100 gives you 700,000. Okay, so this 100 is still also coming from the 100 I've computed right here. So once you do that, it's now time to add up everything. Okay, so when you add up the total costs for male, you get 65, and then the total cost for female. So what we've been computing right here now is what we are calling costs 2. Remember this diagram? Okay, so what we've done is computed the additional costs. Okay, now we need to, so you see we've computed the additional costs. So now what we need to do is compute the additional revenue, basically the price of B less the price of A. So let's see how we do that. So how do we get the additional revenue? So I have a similar template. Okay, so the standard is what I would call A, and this would be my B right here. Okay, so my standard is product A, okay, here, right here, and then product B is a product I get when the hormone has been added. So we want to get the revenue. And what is revenue? Revenue is the quantity times the selling price. Okay, so where am I getting this 200? Okay, let's see where I get this 200 from. Okay, so you see this statement right here, of the output selected for further processing. Okay, 200 liters will be for male customers. Okay, meaning that 800 will be for female customers. So 200 right here, and then 800 right here. And remember, the normal rate, okay, is 399.8, as we've already seen. Okay, so 39.98 for 100, that means for 1,000 it is 399.8. 1,000, remember, 1,000 milliliters is equal to 1 liter. So when you multiply that, okay, you get that. And when you multiply this side, the 800 for the female version times the normal rate, you get 319,840. So I hope this one is clear. Now, how about when the product is added? Okay, where am I getting 202 from? So let's see where I'm getting 202 from. Okay, so remember, let's look at this statement. In both cases, the adding of hormone adds to the overall volume of the product, as there is no resulting process loss. That means if we process 200 liters, okay, and we add 2 liters of hormone, okay, the result is 200 plus 2, which gives me 202, because there is no process loss. Okay, so to the standard, I'm adding 2 liters to get 202. Okay, I hope that is clear. To the female, now remember the female is 800. You see 800 right here. Okay, and how much I'm adding? I'm adding 8. So 800 plus 8 gives me 808. I hope that's clear. Now, how about this rate? Now, this is the price of B. Remember, what we're trying to do is the revenue from B, which is the total sales volume times the quantity. So we've obtained the sales volume, 202 and 808. We now need to figure out the rate when we've added the hormone. So where am I getting those figures? Those figures are at, remember, please download the copy of the paper. So the sales prices, okay, for the enhanced versions are 75 per 100 mil. That means for 1,000 mil, which is 1 liter, this would be 750. And for the female, it is 59.5 for 100. That means for 1,000 mil, which is 1 liter, this is 595. So 750 for male, 595 for female, to give you. So when you multiply this figure by this figure, you get 480 rather. And when you multiply this figure times this figure, you get that figure. So now we want to find the additional revenue. Remember from the theory, the additional revenue is the price of B less the price of A. So what's the difference? Okay, so as you can see in my formula right here, okay, what I'm doing is I'm subtracting price of B minus price of B, as you can see, the additional revenue. So here I'm getting 7,150, and here, as you can see, is 480, okay, minus 319. So I get 169.20. So as you can see from the formula, okay, what I'm doing, I'm subtracting this minus this to get 160. So that is the price of B minus price of A. So remember, the decision is I should only proceed if price of B less price of A should exceed costs 2. So what we want to do right now is to find the difference. Okay, so the difference, as you can see here, so the additional revenue for mail is 71,540 minus the total costs of 65,500, which gives me a positive figure of 6040. So the conclusion from this is that we should proceed with the mail version because the additional revenue exceeds the additional costs. Okay, how about the female version? Okay, now the additional revenue for the female version is 169.20. Okay, however the costs are 166,000. That means we have a net loss of 50.80, meaning that we should not proceed with the female version. Okay, so a quick recap. We're trying to evaluate whether we should go ahead and proceed with process 2. To be able to do that, we should only proceed if the price of B less the price of A exceeds the additional costs. Okay, and we define the relevant cost as a future incremental cash flow. Okay, and what we're doing in this complicated question, okay, of Sniff Co is to try and evaluate the additional costs. Okay, so we had hormone costs, which are 15,000. Then supervise, all these costs were not relevant. Okay, so they were not future cash flows, they were not incremental cash flows. Then the labor rate, we got the labor rate by computing the contribution foregone from diverting the labor, and the contribution foregone was sales less variable costs to give us the total contribution foregone. Then we converted this to a rate per hour. So by dividing the cost divided by a number of hours, we get $100. So we're able to get the additional cost. Then we got the incremental revenue, okay, right here. Then we compared the incremental revenue to the incremental cost, and the male version gives us a positive figure while the female version is a loss. So the solution is proceed with male version and do not proceed with the female version. So if you're able to do this from the question, that would be a quick 15 marks. Okay, so briefly, if we look at the other parts of the question, okay, outline part A, outline the financial and other factors that Sniff Co should consider before making a further processing decision. So that is very easy. Okay, what are the factors we should consider before proceeding ahead with process 2? The first is the costs. Okay, our costs should not exceed the incremental revenue. So a quick look at the answer will reveal those facts. So the incremental revenue, which is the price of B less the price of C. Okay, the incremental costs, we have to consider the incremental costs. Okay, we have to look at the impact on sales volumes. So the product we're selling is a highly branded product. How will it affect the future sales if we add the hormone? Then the impact on reputation. Okay, of course, since it's a high branded product, okay, and adding hormones may not be universally popular, so it may have an effect on the reputation. Then another reason given in the answer is potential legal costs if in case the product is allergic to something. But here really you have to think of all possible sensible answers you can make. Okay, so things like, for instance, is there expertise? Do they have expertise? Okay, equipment, do they need additional equipment? Do they need a new production line? Okay, then how about the existing product? If they divert labor, okay, what will it mean for the existing products? So these are all areas. Then you have to look at things like the market. Okay, do they have a market for their new product, their new brand? So as long as you mention a sensible answer, you should be able to get a mark. Okay, then of course part C of the question, you remember we evaluated that the female version is not worthwhile producing. So in part C they're telling us what is the selling price per 100 mil for the female version. That would ensure that we break even in the test month. Okay, so remember the additional costs are 166,000. Okay, those are the additional costs from the female version. Okay, the standard female version costs 319.840. So that means to break even, the sum of 319,840 plus 166, which is 485,840, okay, divided by the new volume of 808. Okay, so the solution is right here. So 166, where is it coming from? It is the additional costs for the female version. 319,840, where is that coming from? It is coming from the price of A. Okay, so the price of A. So from this theory, to break even, the price of A plus the costs of 2 should equal to the price of the new product. Makes sense? The additional costs plus the price you get here should be able to be recovered by the price of B. So that is what the solution is. So this, now we're dividing by the output at B. Okay, the output here is, as we can obtain it from here, the output is 808. Do you remember? The output of B is 808 for the female version, and these are liters. So which gives us 601.29 per liter. That means to get per 100 mils, we divide this figure here by 10 to give us 60.13. I hope this is very clear. Okay, then part C. Okay, we're looking at outsourcing. Basically outsourcing is you're giving a key production process or procedure within the company and you're giving it to an external party. So in this case they're telling us what should we consider. Okay, so here it has to be very logical. If you are outsourcing, okay, what would you consider? One, you'd have to consider the price which you're going to pay the contractor. You have to consider the reliability of the supplier. What is his track record? Can he deliver on time? You have to look at the quality aspects for the supplier. Can the supplier produce a quality product? Okay, then you have to look at things like in-house. What will happen to the workers? What will happen to the workers who've been making, if you outsource? What will they do? What will be the effect on the morale? Will you need to lay them off? That means you have to consider the legal implications and also the redundancy costs. So when you're thinking of outsourcing, you have to look at the financial and also the non-financial bits. And as long as you make a sensible explanation, you should be able to get some marks of this part. So you can see cost, which we've mentioned, quality, okay, reliability of supply, access, expertise. Okay, so these are not the answers you should necessarily reproduce, but you just have to think like that. Okay, thanks, we've come to the end of the chapter. Okay, I've been once again John Tende. We've been discussing ACCA F5 Performance Management, and we've been focusing on further processing decisions. Remember, you can give me some feedback at this email address. Otherwise, I wish you the best of luck, and please subscribe to my channel and give me some feedback. All right, thank you, and see you soon.